Have you noticed the rising prices? It's not just you. The Consumer Price Index, or CPI, has been on a steady climb, making its presence felt in the wallets of consumers everywhere. In March alone, the CPI rose by 0.4%, exceeding expectations and pushing the 12-month inflation rate to 3.5%. Now you might ask, what is driving this increase? The answer lies in the higher costs of shelter and energy. When we exclude food and energy from the equation, the core CPI also accelerated by 0.4%. This hike is not only affecting everyday consumers, but also causing ripples in the stock market, leading to a decline and a spike in Treasury yields. Expectations of the Federal Reserve cutting interest rates have been dampened by this higher-than-expected inflation. The markets now anticipate these cuts to be delayed until September. Federal Reserve officials are treading carefully, wary that inflation may prove to be stickier than anticipated. But what does this mean for the average worker? The report also highlighted stagnant real average hourly earnings, indicating that while prices are on the rise, wages are not keeping pace. This creates challenges for workers who are striving to maintain their standard of living in the face of rising costs. Federal Reserve officials are keeping a close eye on these inflation trends. The expectations for a potential rate cut in July are now being questioned, adding another layer of uncertainty to an already complex economic landscape. So, what does the future hold? It's hard to say. Economists and policymakers are continuously monitoring these developments, hoping to strike a balance between economic growth and price stability. But one thing is certain: the impact of these inflation rates is far-reaching, affecting everyone from the everyday consumer to the largest corporations. In summary, the inflation rates are continuing to rise, not cooling at the desirable rate. This has led to delays in anticipated interest rate cuts, adding to the economic uncertainty. While it's too early to predict the full impact of these trends, they serve as a reminder of the delicate balance that exists within our economy and the potential challenges that lie ahead.